Hello and welcome to Little Too Simple, where today we will debunk the biggest myth in internet history and prove to you guys that Yahoo was definitely not a failed business. By the end of this video, you will know that Yahoo was an extremely successful business but failed miserably with their products and services. We will also show you how the Yahoo story ended with a market cap of over $60 billion and not just $4.8 billion which they got from their sale to Verizon. But before you fasten your seatbelts, let's give this video a big thumbs up and subscribe to our channel. Yahoo started in 1994 and was originally named Jerry's Guide to the World Wide Web and was later renamed as Yahoo. The yahoo.com domain started the first of its kind journey in the vast ocean of World Wide Web, and Yahoo was set to become one of the major web portals. Sure, the millennials might sneer now because the word Yahoo is now obsolete, and now you can just Google it. But when Yahoo started, it represented something huge: the open web. The timeline of Yahoo shows a spike in its popularity, a peak of cultivating an ultimate 1 billion monthly active users to selling its share for a chump change to Verizon. And the sale of Yahoo to Verizon is where most people think the story had ended for Yahoo. But that is very far from the truth. And this video explores the part of Yahoo's story which began in the early years of the company and continued for quite some time even after the sale to Verizon. The beginnings. Yahoo started with almost nothing like most startups do, but at its peak reached a market cap of $125 billion. And throughout this journey, Yahoo acquired several companies. While most people discuss about the failed or missed acquisitions by Yahoo, such as Yahoo turning down an opportunity to buy Google for $1 million in 1998, or the acquisition of Broadcast.com for $5.7 billion in shares in 1999, with Broadcast.com losing most of its value a year later in the dot-com bubble. And the most talked about Yahoo's acquisition miss came in the year 2005. The board of a then emerging social networking site, Facebook, offered Yahoo a good purchase price of $1 billion, but Yahoo's board lowered its offer to $850 million, allowing Facebook CEO Mark Zuckerberg, who was anyway against the sale, to walk away from the deal. But most people don't realize that Yahoo also had some extremely successful investments, like 16.3% stake in Alibaba and 35.5% stake in Yahoo Japan and several other companies. In fact, by 2013, Yahoo started to receive more revenue from its investments in Alibaba and Yahoo Japan than its core business. The stakes in Alibaba and Yahoo Japan brought the company about $900 million during 2013 compared to just over $450 million from the rest of Yahoo. The sale of Yahoo to Verizon. By the end of the year 2016, the news of two massive Yahoo data breaches came to light. In September 2016, Yahoo announced that a 2014 hack had led to 500 million accounts to be compromised, including names, email addresses, and passwords. Later in December, Yahoo revealed that data from more than 1 billion users had been stolen in 2013. Yahoo was facing pressure to make drastic changes to its business model. The future of the company looked uncertain at best. Due to their core business being in total decline, Marissa Mayer, who was then the CEO of Yahoo, was forced to find a way for shareholders to benefit from the company's holdings in Alibaba and Yahoo Japan. The stake in Alibaba alone was worth over $30 billion in 2013, while the stake in Yahoo Japan was worth over $4 billion back then. Quarterly earnings calls became a stage for investors to dig Yahoo leadership to focus on its stake in Alibaba and Yahoo Japan instead of focusing on Yahoo's core products. With not many options left, Yahoo decided to auction off its core businesses that included search email and advertising tool to the highest bidder. In 2017, Verizon finally completed the acquisition of Yahoo at $4.83 billion for Yahoo's assets, but that did not include the stake in Alibaba or Yahoo Japan. And this is the point which most people miss, and they think that Yahoo ended its story with its sale to Verizon for $4.83 billion. What happened to Yahoo after the sale to Verizon? The remains of Yahoo after its sale to Verizon were restructured to form a company called Altaba Incorporation, which became the holding company for all of Yahoo's remaining assets. Altaba had over $10 billion in cash, 16.3% stake in Alibaba, which is the biggest e-commerce company in China, and 35.5% stake in Yahoo Japan, which was a Japanese subsidiary of Yahoo and was doing extremely well in Japan. Along with these, Yahoo also had stakes in Snapchat, Excalibur IP, Hortonworks, Gomaji, InvestNet, Rimage Corporation, SeedGeek, Protagenic Therapeutics, Eastman Kodak Company, and Paperless Post. Altaba's market cap from all of its holding companies was over $55 billion by the end of 2019. Out of these, stakes in Alibaba and Yahoo Japan were alone worth over $45 billion, adding to the $4.8 billion they got from the sale of their core businesses to Verizon. So by the end of 2019, the value of Altaba Incorporation, or the former Yahoo, was over $60 billion. By the end of 2019, Altaba Incorporation was dissolved, and its shareholders were paid over $60 billion in gross proceeds. And an interesting fact, just for you guys who stayed this far for the video, Altaba was a publicly listed company and traded on Nasdaq from June 2017 to October 2019 under the ticker symbol AABA. Hope we were able to conclusively prove that Yahoo was definitely not a failed business that was sold to Verizon for $4.8 billion, but instead was valued at over $60 billion even at the time of its dissolution. Please give a big thumbs up if you liked this video and do subscribe to our channel for many more videos like this one. Also, don't forget to turn on the notification bell to stay updated whenever we upload a new video. Thanks for watching and have a good one, guys.